And the big figure of the week is, of course, the initial GDP estimates. What are you forecasting?
We're going for 0.6. That's trend growth, the UK economy expanding at the rate it should if nothing else was going on. Now, that's probably towards the optimistic side, but we saw some very good production numbers in February, and we're optimistic that some of that strength will have carried through to March as well.
So what does this mean for the recovery in a long-term sense?
Well, that's an excellent question, because 0.6 by itself sounds great if you're growing at trend, but the problem is we have this big output gap. So you don't just need to grow at trend, you need to grow faster than that. And you don't just need one quarter, you need a whole series of strong growth rates. So even if we see a nice robust number on Friday, it still doesn't mean the UK economy is out of the woods yet.
And if you do see a nice robust number, or even if you don't, what is it going to mean for the election campaign?
Well, the election one's a hard one to call because everyone will put their own spin on it. Labour would probably say this means you can't trust anyone else, don't let the Tories wreck the recovery. The Tories would probably say, well, this means the economy is recovering quite well, we can afford to cut spending and raise taxes a bit quicker. So it's all in the eye of the beholder, I think.
Does it matter to the voters? Do you think it's going to have a big impact on people, or are we too caught up in our own little world here?
I think the state of the economy does matter to people. It's consistently the #1 priority on their list. The problem is there's sometimes a disconnect between people's own experience and what you see in the official data. And I think a good example of that were the labour market figures. It's been a busy week in the UK. The official claimant measure of unemployment fell, but actually the measure that goes around and talks to people and asks them what's going on increased to 2.5 million.
Do you think any of the parties have come up with a credible economic plan thus far?
Well, unfortunately, a credible deficit reduction plan, which is the big issue, without any details, that's an oxymoron. It can't happen. And none of the parties has been clear enough to spell out how they'll cut the deficit if they're elected over the next Parliament. Now, the problem is the government doesn't want to do that, and so neither do the Tories or the Lib Dems, because they're all running scared of frightening the electorate. So what we're actually probably going to see is whoever wins the election, whoever forms the next government, they will probably hold a budget reasonably quickly and set out the spending priorities then.
And what would you like to see in that budget?
What I'd like to see personally is a pretty strong pace of fiscal consolidation focused on spending cuts. We got into this mess because the Labour government assumed that too much of the tax revenue that it had seen was permanent, and it wasn't. Given that that tax revenue has gone away, it's now time to reverse what were permanent spending rises. But I don't want to see it happen this year. The private sector is still very weak. We're not seeing the rebalancing of the economy towards investments and exports. And that means that really the public sector support should stay in place for 2010 and then be cut back as the recovery really takes hold next year.
And how about Bank of England policy on that?
Well, the Bank of England really is in hibernation right now, and I think it should stay that way until 2011. We don't expect any movement in rates just after the election, and indeed the committee are probably sitting there crunching the numbers right up until August. At this point, I still wouldn't rule out further asset purchases, particularly if the recovery disappoints. But it's clear that for some of the committee members at least, inflation concerns are now also coming to the surface.
Those inflation concerns, could you go a little further? What are you seeing there?
So we had some inflation numbers this week. CPI inflation jumped to 3.4%. That's higher than we were expecting. And we've had a few upside areas where we've got things wrong. The story is basically because energy prices or other individual prices push up inflation, people start worrying about inflation and expectations rise, and then that feeds through into the labour market. Now, personally, I don't think this is a very convincing story, and anyone on the MPC who believes it has a very short memory, because we saw exactly the same thing in 2008. Inflation spiked, household inflation expectations jumped, and the impact on earnings growth was nothing. I'd expect a similar thing to play out this time around, because the labour market is just too weak for employees to try and go in and bargain for higher wages. So there's no risk of a cost-price spiral at the moment.
Okay, thank you very much.